Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper, and tonight's webinar is position trading using the monthly and weekly trading ranges. So we'll get into that in a moment. Before we do, if you can read through the risk disclaimer, that would be great. Any questions tonight to the chat box or Q&A box? Got both open. All right, we'll move along now. For those that don't know me, my name is Duncan Cooper. I'm Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading the Forex market now for more than 20 years, mentoring for more than 10. If you want to contact me about the webinars, my email is there, duncan.cooper@acy.com. And through the week, you can connect with me at our website, acy.com, go to the Market News tab, or at our YouTube channel, which is at ACY Securities Australia. And if you want to connect with me personally, my Linktree page is there. You'll get my links on that page. If you want to get access to the charts I'm using, then contact Nathan Bray's emails on screen. I'll put his details in chat later. So I'm going to be using my MT4 charts tonight with the monthly high and low indicator, weekly high and low indicator on them. So if you have my chart layouts, you'll be able to utilize those indicators. So let's get into tonight's presentation. Now, in tonight's presentation, which I'll give you a copy of, this is the first webinar in the, I'm not sure what's going on there, advanced webinar series. So I'm going to assume that you know what support and resistance is, that what a fib is. But I'll try and keep things relatively simple. Now, in this presentation, there are lots of examples, but we'll go to the charts and I will show you how I would do it in real time. But there's examples in here showing the theory, lots of examples. So let's get into it. For those coming in late, if you just read through the disclaimer again, any questions to the chat box or the Q&A box. All right, we'll move on. So we're going to be discussing the monthly, weekly trading ranges and how you can be utilizing them to position trade. So we're going to look at trading ranges as the first topic, so let's get into that. Position trading using monthly, weekly trading ranges. Now, price will often retrace back inside the trading range of the previous monthly and weekly candlesticks. So look at it as a weekly candlestick or a monthly candlestick as a range that the market may move back into before further moving up next week or next month, or further moving down next week, next month, depending on the direction of the market. Now, this is going to offer the opportunity to enter into a trade on a retracement before the prevailing trend resumes. And Fibonacci tool should be drawn over the trading range of the previous monthly and weekly candlesticks. The Fibonacci tool creates high probability retracement levels that price may pull back to before the prevailing trend resumes. And the Fibonacci tool also creates high probability extension levels that you can use for your profit targets for your trades, okay? So we're going to use the Fib tool across the high-low range of the weekly and the monthly candles. Right, so to help you identify the previous monthly and weekly trading ranges, we'll use the candlestick high and low indicator, which is in my MT4 setup. The indicator is automatically plotted on the 4-hour, 1-hour, and 50-minute charts, so you'll be able to see where those highs and lows are on those timeframes. And the previous monthly candlesticks high and low, they're displayed as olive dashed lines. And the previous weekly candlesticks high and low are displayed as crimson dashed lines. And the indicator will update at the start of a new monthly or weekly candlestick. Okay, you don't need to do anything for it to update. It will update itself on the charts. So here's a pictorial view on a 4-hour chart. The line at the top is last month's high. This is last month's low. As I said, it's printed on the 4-hour, 1-hour, 50-minute charts. I generally are taking stock of this though at a high level on the 4-hour chart. So I can see here that this is last month's high, sorry, last month's low, last month's high. That's the whole range of the candle range for that month. And the red dashed lines is showing you last week's high and last week's low. And of course, last month's high and last month's low will only update once a month as a new month comes around, but within a month, we will probably get 4 weekly candles. So the weekly high and low will change potentially 4 times in a month. All right, the idea. So basically what I'm saying is this could be a monthly candle or a weekly candlestick as a high and a low trading range, and then the next month or next week will fall. What we're going to see is that we'll trade within the range of the previous candle at some point. All right, so what we're going to do is draw the fib. So if I have a blue candlestick, and as well I can make an assumption of where I think the long-term trend is on the monthly direction or the weekly direction, depending on what candlestick I'm looking at. But if we have a blue candlestick this week or this month, then I'm going to draw the fib from high to low, expecting that we'll retrace back inside that range before moving higher. So I'll draw a fib from high to low, expecting that price could pull back to the 62 level or the 79% level of that range. From a position trading, I could be trading at the 62 level or the 79% level, putting my stop below the low, expecting that we won't break the low of the candlestick. And then we're going to be potentially moving up, targeting the 127 extension. But of course, price, if it stalls at the high, you may want to take profits, but targeting the 127 extension. Okay, so it's really the same concept as I would use a fib tool across maybe a 4-hour continuation range pattern, but we're using the candlestick range on the weekly chart and the monthly chart. All right, so that's the candle forms, but you can see that during the month, we've traded down to 79% level of this candle high to low range before moving up. Now you're going to see this happening regularly. It obviously happens more on the weekly candles than it does on the monthly candles because there's more candles. But you're going to see it happening on the weekly candle ranges, the monthly candle ranges. It happened on the euro dollar and the pound dollar last week on the weekly range, fell at 79% level before moving further down. All right, and vice versa, if the candle's red, so last month's candle or last week's candle's red, I'd expect then take the philosophy that the next candle's going to move down, and we're looking for retracement back up inside the candle. So drawing a fib from high to low across the range, looking for price action to retrace back up inside the candle range to either 62 or 79% level. Can be trading at those levels, putting your stop above the high, targeting the 127 extension. Of course, the low could be support, so you may need to manage your trade there, but looking to target the 127 extension. All right, before then, price will then probably pop up. So if this was to occur, be it in an uptrend or a downtrend, in this example, obviously it's pictorial view is a downtrend. Theoretically, you could be trading at the high of the month here. So let's call this candle a monthly candle. You could be trading here at the high of the potential month and taking profits at the bottom of the month. Then expecting that this to be the next candle range for the month as we move into the next month. And then you're looking at this candle high to low and looking for retracement back inside that range for the next positional play in the new month. All right. So you can see that you can actually see this happening over a series of months. We trace back inside the the monthly candle. Let's call this January. So in February, we trace up before moving down. And then in March, we trace up within February's candle before moving down, so on and so on. All right, so that's what it will look like just looking at candles. But if we dropped it to a 4-hour chart, you'd see many, many 4-hour candles. And I'd have a fib from the high to low, and I'd see all these 4-hour candles coming up, topping out up here potentially to then move down. All right, so we're going to go through some chart examples. I may skip over a few because there are a lot. We might go through some chart examples here to maybe 7:30, and then my time, and then we'll get into the real charts, finishing around about 1:45. So for each chart example, there is either a monthly chart and a 4-hour chart, or a weekly chart and a 4-hour chart. So if I'm using the range of the monthly candle, I'm showing you a monthly chart first of all to show you what it looks like, and then I'm dropping to the 4-hour chart to show you the range, having the fib drawn across the 4-hour chart, and then we can see what happens. Same deal on the weekly chart. There's a weekly chart and a 4-hour chart. Now on each chart, the arrow shown on the monthly or weekly chart identifies which candlestick range was used when drawing the Fibonacci tool on the 4-hour chart, okay? All right, so here we have a monthly chart, and as I'm taking it, in fact, all these examples, the arrow will be pointing at the candle, not the last candle, but the second to last candle, because that's the previous month, and that's the current, and this is the current month forming as I was taking the snapshots, okay? So the range is always the preceding candle here. All right, so that was a positive month the previous month here on the dollar franc. For our chart, I'm also drawing in the hypothetical blue candle here on the 4-hour chart just to help you understand that's the candle range. All right, and if it's a downtrend, I'll be showing you a pinkish reddish candle on the 4-hour. All right, so that's the candle range for the month. So we're drawing a fib from a low to high. And what we see is through the course of the month, the 62% level, price action gets support once, comes down almost to the 79% level, but it's really getting support at the 62 to move up. All right, if all you were doing through the month was buying at the 62 level, it bounces up. If you bought here, it does come down, and then it comes back up into profit. Now, in this example, it isn't breaking above the 0 level yet. What I'm just showing you here is that we are having opportunities in the month, in the new month, as the month is ticking by every 4-hour candle, is that we're getting some form of support along the 62% level of the range of last month's candle. And then if I proceed, I'm pretty sure we will show you what happens in the next month. So in this month, there are opportunities to be buying for positional play around the 62% level. It doesn't quite get down to the 79% level, but then the next month, so that, well, we're going to head into the next month. Now you can see that was the candle that had the range on from a monthly perspective. That's the 4-hour chart I just showed you for that candle. And then the next candle moves up. The next month's candle moves up. So moving into the 4-hour chart, this is how it drawn and squashed it in. This is where the opportunities were to buy along the 62% level. And then lo and behold, we move up into the new month, the next month, up to the 127 extension. So sometimes the opportunity to take the positional trade will be in, let's call this first candle January. February, it's pulled back to the 62% level, but it hasn't moved up to 127 extension within that month. And then the next month moves up to the 127 extension. Now, sometimes price will pull back to the 62 or 79% level in the month that you're in, and then also go up to the 127 extension in the same month. Other times it doesn't, it takes another month. So you might be in a positional trade here for 6 to 8 weeks. So this is how I do a positional play for 6 to 8 weeks. At some point in a month where we're pulling back to the 62 to 79% level, I'm taking my position. I may be taking profit in the same month or the next month. Sometimes they actually go into about 12 weeks. All right, here's a weekly chart. So previous week's candles was blue. Just denominating the blue candle there. Fib drawn from low to high across that week. And price pulls back to the 79% level of that range before then moving up to try to move above the high, becomes resistance, and then comes back down. That's why you have to manage it when you start attacking the high of the week, because that could hold, not move to the 127 extension, and then pull back. But that's a prime example of pulling back to 79% level within last week's candle range, and then moving up. So as I was saying in the presentation, you could be buying here. All right. Stop below here. As long as we don't have a week down and we have a week up, we'll be right. So as long as we have a week up, then the new week comes, we may pull back, but as long as this week has another week up, we're going to be right. And the same thing may happen the next week. We pull back, we could pull back 62%, we have a week up. Pull back 62%, we have another week up. That can happen week in, week out, depending on what's happening. Is that all making sense? So this is how I create my little positional plays for the week, depending on what I'm looking to do. I'm just following the trend. If I'm just following the trend this week, and the trend is up on the weekly chart for a given pair, this is the dollar yen, I would like to be buying at the 79% level of last week's low to high range. All right, that would be the perfect area to be a buyer, to then see a week up once more. All right, that would be the perfect level. So I tend to wait for those levels to come in rather than looking to be a buyer up here somewhere. Buy at discount to the previous week. All right, so previous week on this example was blue. There's the candle range, high, low. New week comes in, we pull back to 62% level before moving up to 127 extension and above. All right. Weekly example, last week's blue. There's the candle range, draw the fib in. Into the new week, yes, we come up almost to the high of the previous week. Then we pull back to the 79% level. So again, I'm not going to do this for everyone, but just so I can hammer it home. In the new week, look to be the buyer. In a perfect world, you want this happening every week. I'm looking at a currency pair that's in a weekly uptrend. In the new week, can it pull back to the 79% level of last week's range? That would be the perfect scenario every week, so that you're buying at a considerable discount to the previous week's range. Stop below here, and then the perfect scenario is it comes up to 127 extension and you take profit. And then you look for the rinse and repeat next week. Now, it doesn't happen every week, but in a perfect world, that's what you would want to happen. All right, for a positional play. Now, I'm just showing you here that you can be buying at 79% level, stop below low. If you wanted to get cute, you could drop it in this area when you know you're at the 79% area of the weekly range and you're expecting the potential turnaround. You can be dropping down to a lower time frame, like a 50-minute chart, and look for a tighter entry. So maybe rather than risking 50 or 100 pips, you could be constructing a lower time frame entry and maybe risking 20 pips. So then you're able to maximize your risk to reward if you want to. If you're targeting up to the high of the week for this week and you want to risk 20 pips, your risk reward could be 1 to 10 or better. Sam is saying, why has that fib bottom to top, but the chart moves top to bottom? I don't understand your question. So why is that fib bottom to top, but the chart moves top to bottom? The direction, well, I'm drawing the fib this previous week. I don't really understand the question, but I'll just try and see if I can answer it. Previous week's blue, and I'm expecting the next week a week up because the previous week's blue. So that's the weekly candle, that's the weekly high, that red line to the weekly low. I draw the fib tool from last week's low. I've just drawn it over here on dashed line. It should be, that is the low. But because the candle's blue, I've drawn it from low to high. All right. Now you might go, okay, well, price action through this week actually went down this way. I think this might be a question. So wouldn't I draw my fib from high to low? Yes, you could, but what I'm doing is I'm dictating how I'm drawing my fib based on the closing direction of the candle. Closing direction of the candle's blue, it's positive, so I'm drawing my fib in that direction, okay? Following the trend, that's it. Following the dominant trend of the weekly chart rather than what I'm seeing intraday swings here on the 4-hour chart, okay? So that's why I'm putting this candle in blue. It's a blue candle, which is up. So I'm going from the low of the candle to the high, even though maybe you would, if you're just looking at this intraday, you'd start your fib drawing from high to low. Okay, so yeah, I think that was what your question was, all right? All right. Now this might be a bit of an anomaly, this example, because you're looking at price action thinking price action is going down here, so I shouldn't have been drawing my fib the opposite way, but the weekly close is still positive. All right, this example, the previous week's blue, so I'm drawing my fib from low to high. I'm looking at, first I'm looking at the direction of the candle, positive. Then I'm looking at where's the high and low of the week. And I'm basing my fib drawn off those 2 points. Because in this particular week, we go down, we go up, we go down. It's a little bit choppy, but I'm using the color of the candle to determine how I'm drawing my fib. In the new start of the week, we dip below the 62 level, doesn't get to the 79. So you could have been looking to try and execute around the 62 level, stop below the low, and we can see price moves up. Now, personally, I may have been in this example, looking to buy at the 79% level because that's my optimal level. Stop below here. And this could be an opportunity where I miss out. That's fine. Because really, and you'll hear me say this in my analysis webinars, I like to be trading at the 79% level because it offers me a better discount rate, better risk reward as we're moving up towards the 127 extension. So yes, sometimes price will hold at the 62% level and then move up all week. I will tend to miss out there because I'm looking to be a buyer at the 79% level. That's fine. You need to decide at what levels you want to participate in. Now you can participate at the 62 level or the 79% level. But of course, sometimes price won't get to the 79% level, so you can't participate. All right, I'm just going to speed up a little bit. Weekly chart, blue candle, draw the fib across the range. This example, we only pull back to 62 level. So if you're looking to engage at that level, great. Stop below the low. You can see we move up all week. Now, the beauty of the concept of trying to buy the pullbacks within the range of the previous week or the previous month is, in this example, the previous week's range, is if you're buying here at the start of the week, this just goes up all week. This is easy trading. Once you're in profit and you're at break even, and we've broken above the high here and we're targeting the 127 extension up here, you're actually not doing anything here. You're already in the trade. You're just looking to get out. You're not looking to get in. You've gotten in near the low of the week. And if you get good at this, and when you're right, you'll be finding out that you're getting in at the low of the week. And if you get really good at this and you get in at the start of the low of the week, and maybe you're thinking that we're going to be moving up for the next 3 or 4 weeks. Well, I've been saying, take profit at the 127 extension, but if you're expecting maybe a 3 or 4 week move up and you can get in at the low of a week, maybe the first week, you could hold it for the next 3 weeks because we may be moving up 3 weeks. Now, if you look at a weekly chart, you'll see movements up or down of 3 or 4 weeks. All right. So this is how you can hold a positional play for many weeks. All right, weekly chart candles blue. There's the range. Now, actually, in the formation of the previous week, sometimes this happens. Price will actually form the low and the high of the week and then pull back within that range during the week. So you wouldn't be potentially wrong to be a buyer here during this week as the candle's forming. But in the new week, it only gets down to the 62% level. So you would have to look in the new week to engage there. But you can find that during the formation of the weekly candle, the pullback to the 79% level can happen Thursday or Friday of the week finishing. And then the next week, it's just moving up from that level, where it's already been, okay? All right, I'm going to skip forward a few charts. There we go. These are the, all right, let me just skip forward. All right, I'm into the downward trending charts now. Here we go. Go back one. So here the monthly candle's red. So I'm expecting the next month will be down. So I'm looking to sell a rally within the range of last month. Okay. There's the red pinky candle for the previous month. Fibs drawn across the high to low range of that monthly candle. Now in this month, we get some resistance at the 62 level. So you could have been trading at 62 level once, twice, 3 times. Stop above the high of last month. Then at the latter end of the month, we come down. We don't quite get down to 127 extensions. So this is actually a trade that's extending into the next month. Now you may have taken profits a little bit short of here if you wanted to. That's just fine. But just to show you a continuation, that was the 4-hour chart month just there. And then this is the next month coming in. So that was the candle of the previous month. This was the next month forming. It finished around about here. And then the next month continues down to the 127 extension, even down to the 162 extension. So the start of this 2-month move was in this month, pulling back between the high to lower range, holding at the 62% level. All right, now there was actually ample time to make a decision there. Did you want to trade at the 62% area? You got a little bit consolidatory there. Started to form, some other maybe price patterns that you can see there that could have maybe started to tell you that maybe we're turning around. You can see a little head and shoulder pattern. I'm going to cover that in another webinar, but there's a little head, shoulder, head, right shoulder. We come down to a lower bottom, rally up, a smaller 79% retracement here, down, rally, boom. All right. So in this starting 4-hour downtrend here from the 62% level, maybe you could have been getting in a lower time frame, using a smaller pattern to get in, understanding that we're failing at the 62% level of last month's high to low range, expecting maybe that range to then get copied down here to form that candle. That all makes sense? All right, so that's my philosophy. So I'm looking at if last month's candle's down, and let's say last month's candle closed here. All right, so last month's candle is down. Let's say it closed here. I'm not going to look to sell here because what I want to happen during the month is that the new candle forms a high up at the 62 level, preferably at the 79% level. All right. So why would I look to sell here? I want to wait for this retracement to come up. All right. Now, sometimes when this monthly candle closes here, it will go down and break the low of last month before then coming up. All right. But I'm always looking up here to trade to my short side, not down here near the low of last month. All right. Okay, this all makes sense. Monthly chart, last month was red. There's the range, fibs drawn across it. We come up, hit the 62, we drop. We don't go down to the 127 extension, but if you traded here, you had ample time to make some money or at least get the risk out. Then we come up pretty much to 79% level before then selling off. So sometimes price will hit both levels. All right, weekly chart, red candle. There's the weekly range. Now, I've got a few examples of this. So as I was saying, sometimes on the chart before, sometimes on the monthly chart, price will break the low of the monthly candle before then rallying back up within the range. In this example, price has broken the weekly candle before rallying back up within the range. So we have a scenario where we don't rally before we break the low of the candle or the high of the candle, but in this example, the low. What I will do is I draw the fib from last week's low. I would originally have it last week's high. I start from last week's high down to last week's low. But if we don't rally up to the 62.79% level, I just drag my fib down to the low that starts to form in the new week. This was a monthly chart to the low that forms in the new month, and then look for the rally. Here we come up to the 62% level of last week's high to the new week's low, 62 down to the 127 extension. All right, you can see that happening as well. I would miss this because I would be watching up here at 79, but that's fine. All right. Last week's negative, red. Another example here where at the start of the week, we break the low. So I've got the fib position from the high. I drag it to the new low of the new week, comes up to the 62 level. Last week's red. Another example here where at the start of the week, we break the low of the week. So I draw the fib from the high of last week to the new low of this week. And then we come up to 79% level of that range before potentially topping out to move down. All right, so this is the anomaly to the whole equation. Sometimes we will break the low or we'll break the high before then having the retracement. All right, last week's candles down, negative. Another example, we go down first before rallying. So I drag the fib from the last week's low to the new low of the week. So I'm always using, in these downtrend examples, I'm always using last week's high as the focal point for my fib. Now, of course, that's not how you taught in textbooks. If you're looking, people, if we didn't know that was the high of last week, and that was the lower last week, if you didn't know that was last week's range, you would probably draw your fib maybe from this candle high. Or if you wanted to look at a larger range, you would be drawing from up there. All right. But what I'm understanding is that when the candle last week goes down, on a weekly chart, you're going to see that the next candle will trade within the range of last week. It'll look like this on the chart. So I'm focusing on drawing my fib from wherever the high formed down to the low formed. Sometimes the high and the low of the week, all right, is not a significant turning point. It doesn't look like a significant turning point on the chart. All right, so I don't care about that. I just put my fib across the high to low range of last week, whatever it is. Doesn't matter if the high or the low isn't a significant turning point, but I'm focusing on that range for the next week. for a retracement. All right, last week's negative. Another example here. Wow. In this example, what I'm getting across to you is there's the high to low range. Now, we do have a failure here at 62% level, but it actually occurs within. So this, as I'm drawing these boxes on the weekly chart, I'm covering what happened in the week. So this is the new week starting here. So what I can see here is that, as I said before, in some of the uptrending examples on the weekly chart, the high to low range of the week gets formed early in the week. And the rally to the 62% level, it actually happens in the same week. So maybe Monday, Tuesday, the high to low range actually forms. Wednesday, Thursday, we rally up to the 62% level of that range. And then Friday, we start to trade down. And then into the new week, we continue down to 127 extension. All right. So sometimes that rally occurs at the kind of Thursday point or even Friday point. And then as we start the week, we're already on our way down towards the 127 extension as the new week starts, because we've already done the rally at the latter end of last week. All right, so sometimes the rally has already occurred in the previous week. All right. But if you start monitoring the weekly ranges from week to week, you will see that sometimes that occurs. All right. All right, I'm going to wrap that up. There's more examples in here. You're going to get the, I'm going to put it in the chat now so you can study it to your heart's content. Start looking at the charts. It's going to be a lot easier to do what I've been doing on the charts if you've got my charts. Let's go to the live charts, because I just want to cover a couple of setups that I saw last week. Whilst I've been touting my analysis webinars that maybe we could be bottoming out in the market, just because I think we're maybe a little bit overextended. Now, the charts I'm going to be using tonight are my 12 pairs price action. So in the advanced webinar series, I'm using the price action charts, 12 pairs price action. As I said, the monthly highs and lows, the weekly highs and lows are shown on the 4-hour, 1-hour, and 50-minute charts. But let's have a look at the euro dollar. Let me just tidy everything off whenever last use these charts. And price action, yeah, is, let's forget this week. That was last week forming, okay? There's last week's candle. See, that's where the previous week closed there. And see how we retrace back up within the candle. We didn't take out the high of that candle. All right. You see also previous week. See that red week there? Then we come up to this high here. That would have been a 62% retracement of that week's candle. We'll have a look at both. I'm just going to draw a fib across the 2 weeks ago range. In fact, before I do that, just to prove the point, these are my live charts. On the 4-hour chart, you're going to see that's last month's high. That's last month's low. That's the candle range of last month. Last week's high to last week's low there. We've obviously broken the low of last week, this week, at the start of the week. But the previous week's candle, that was the previous week's high here to low. All right. So that was the candle. Then last week, we traded up, okay? a little bit short of the previous week's high. Now, and what you'll see is, yes, if you trade at the 79% level, price would have gone against you a bit. And I said on my Tuesday webinar, if you're bearish, still bearish to euro dollar, look to trade at the 79% level of last week's trading range. All right. Now, putting some other technical analysis in here, we can see that when we top out up here, we've actually come back up the range of last week, and we can see where resistance was over the last couple of weeks to the left here. So this area is really just coming up to the same selling level of here. The high of that week that formed here was a false break of this area. That candle comes up, false breaks, then moves down to the low. Then it rallies 79%, a little bit beyond, within the range of that week, and then moves down. Doesn't quite get down. So the start of this week hasn't then quite followed through to the 127 extension. It has broken, though, last week's low, and now it's rallying. The fact that it's broken last week's low and now come back above, to me, means that what price is doing, at least this week, is, at the start of my week, I would draw my fib from now, as we're into the new week, from last week's low, sorry, from last week's high to last week's low, like so. Now, price has broken the low. So what I do, it's broken the low before rallying back up. So I just drag the fib down to that low. And I would then look, if I wanted to get short this week, my focal point would be here. I like to trade the 79% level, but you could be focusing on the 62. Sometimes price will just come in between the 62 and 79, and then you could look into that area for a turnaround. But I just focus on that level, stop above here if I want to get into a trade. All right. So there was an example there from last week. There was also an example I just want to discuss from a couple of weeks ago as well. Let's just go back to the weekly chart. This candle here. So you can go back on any of these candles and see how price retraced. So there's a candle high and low there. Go to your 4-hour chart. So that would be, all right, as I said, sometimes the high and low aren't major turning points. So the actual high of the week would have been there, and the low would have been here. Now, this example, I thought we came up to the 62, but we don't quite get to the 62. So we get quite a shallow rally into the new week. I would have, if I wanted to get short, I would have been looking to trade here, 79. Stop above here. And I can be planning at the start of the week, where would I like to trade that euro dollar short this week? At the 79% level of last week's range. Now, sometimes price will take me in. Sometimes price won't. In this example there, price does not take me in. All right, so I just have to, I of course have to live with that, because that's trading. Let's just go see what happened the week after. It was an inside week the week after. All right, now let's just have a look at the monthly. So we've actually broken the low of last month. But if I thought we were going to come up this month and then move further down this month again, what I can do, I would start my month by drawing my fib from high to low. All right. And we can see that price doesn't come up to 62% level or 79% level before further moving down. So what I could do is I could drag that, keep that as the monthly focal point high, drag the fib down to, drag the fib down and get hold of it to here. So if price was to come up, for example, to the 62% level of that drawing, that looks like a very good area of potential hold support to be resistance. Well, hold support here We broke below and then we became resistance, resistance. So if we came up to this area here, you've got old support becoming new resistance there, already proven. So that level at 104.56 could be a very good level. Now you might say, oh, I'm not sure it will hold there because I've had to drag my fib further down, but you could watch that level. That would be a definite level to watch if we come up this month to look for a reversal, and you could get in at a lower time frame, or see if price respects the 62% level. If it starts to hold there, then you could decide, do you want to trade? All right, so we've got the pound, because I know there's an example on the pound. From last week. Price action. So there was that was last week's candle move down. So the previous week's candle's here. For our chart. So as last week's trading was going on, that was the high of the previous week. And that was the low of the previous week. So if I thought, okay, we're maybe going to do what price does, it comes back up inside the range of last week before moving down, I could have, if I wanted to, said to myself, I want to short at the 79% level, stop above last week's high because I don't think we're going to have a week up. And then, of course, take profit at the 127 extension. That would have worked out great. And of course, we went a lot further down. Now, from the monthly chart range, January's broken the low of December and it hasn't rallied back inside the candle range. But at the start of the month, I would have had a fib from monthly high to monthly low, looking for, so January starts around about here. Right, January starts about here. In a perfect world, I would be looking for this to have started the new year to come up to this level, 79% level, hold to move down. Now, it didn't do that. It just broke the low of last month and went down. Okay. So I don't have a monthly example to show you. I might have one on the dollar CAD. I'll just finish up here and then we'll go to dollar CAD quickly. So this week on the pound, I would have started my weekly range here. We broke the low of the week, so now I'll drag it down to here. And I could be looking, I like that level. Last month's low lines up with the 79% level of that range. So that would be a good level to look to trade at. It would also be at the point where the imbalance gets filled in here, if you know what an imbalance is. So whether or not price will come up to that level this week, I don't know, but that would be a good level to watch if it did. All right, I just want to jump quickly into the dollar Canadian. Monthly chart. All right, we haven't taken out the high of the monthly candle from the previous month, but the previous month is positive. So I'll draw my fib across the range of last month. But what I can also see is when this monthly candle was forming, the previous month's range was here. Let's just have a look at that range and how last month operated within that range for our chart. Squash that in. So previous month's range would have been there. So December's trading. So as December started, around about here. All right, doesn't quite get down to the 62. Just eyeballing it from that monthly chart, it looked like maybe price did come down to the 62% level. So in a perfect world, the new month in December started round about here. And it would have been good if price could come down to the 62% level or the 79% level of that monthly candle range. Before then, of course, exploding up. That would have been a great positional play, but it didn't quite give you that. Into this month, we haven't taken out the high of the previous month, but we're in an uptrend on the monthly chart. So I would have my fib drawn So in this example, last month's low is just a candle low here. It's just there. It's not a significant low. It's just there, up to there. So that is the range of last month. So that's how I draw my fib now. Lots of purists will go, oh, I wouldn't draw my fib like that, but I'm just purely using last month's range, however it formed, okay? And then if price during this month was to come down to 79% level, I could trade there. I could at least watch to see if price wants to hold here. It wants to find support at 79% level of last month's low to high. And would it hold there to come all the way back up? Because if it did, that would be a great positional play. Right, that's how I create my positional trades. 79% retracements of last month's candle range, be it in an uptrend or a downtrend, okay? That's how I get my great positional plays. I can also get my great positional plays from the weekly 79% pullbacks as well. All right. All right, I'll wrap it up there. Hopefully you got some value from that. If there's any questions, you can obviously email me. Study the PDF that I've given you. Go to the charts, get my chart layouts, so you can start to see where last week's high and low is, whereas last month's high and low is. If you do some work on this, you're going to start to have some light bulb moments, starting to understand that candles form within the range of the previous candle. All right. All right, I'm going to wrap it up there. If you want to join me next week, just head over to the webinar page, if I can get it to come up. There's a link at the top. And we're back next Tuesday for more analysis and education webinar on Wednesday. Next Wednesday, we're going to go through an understanding that monthly and weekly candlestick highs and lows, how we could trade around those. Okay. All right, everybody. Thanks very much. Have a great rest of the week. I look forward to seeing you next time.